Hi, and welcome back to Starr Knows Credit. On this channel, we talk personal and business credit. I am so happy and excited today, guys, because I have a special guest all the way over here from Rock Financial. Y'all have been talking to me, emailing me about getting some business funding for your businesses. And I got an expert in here today. His name is Tony Samino. He is from Rock Financial. I'm about to bring him in so y'all can talk to him today. How you doing today, Tony?
Hey, Starr, thank you so much for having me on. It's an honor more than anything to get a chance to talk to you and your network.
I do appreciate you being here today because I tell you, I get constant emails about Starr. How do I get business funding from my business? My business is new. I haven't even started my business. I don't know where to begin to get business funding. What do I need to do? Limited credit, all types of things. So I said, you know what? I need to reach out to my people out there at Rock Financial that know more about this than I do. So let me get the experts on the phone.
Well, I certainly appreciate you. You definitely giving us the opportunity, and more than anything, one thing I could tell you about funding is whether you're talking personal or business, it's a moving target. It'll never be the same. 6 months from now, you and I could do another one of these meetings, and we're going to say totally different things. If we did it 6 months ago, it would be totally different than it is right now. And I think that's part of what makes it so difficult for business owners is, hey, I'm either trying to start a business or run a business, or I got a couple of businesses going on. How am I supposed to, understand what's going on with funding too? And, I think that's where, business owners, the best ones have great resources, and
Absolutely.
they know when to play those resources. They know, what to ask to get the right information. So I'm excited to share some of that stuff with you guys today, and in terms of business funding in particular. But I know that there'll be plenty that you'll be able to pull out of this that may not even have anything to do with funding at all, right? As business owners, it's about a little bit of everything. Your brand, you personally, a lot of these things go into funding ultimately, right? You might think, oh well, my brand doesn't really matter, or what my email address doesn't even matter. But if you're somebody that's at gmail.com or at yahoo.com and you apply for a business loan, there's a chance that you'll get declined just based on your email address versus it being, at Bill's Towing or at jimspizza.com, right? Where you now have your own company domain where you host your email, right? So these little things, these little caveats, I hope are gonna make kind of the difference, to get you from not only application to approval, but ultimately approval to funding. That's the real goal.
Absolutely, absolutely. Because like you said, it is those little things that can make a difference. And that might be the only little thing that didn't get you the funding. And you don't want it to be because you got a Gmail instead of your business domain name. That would be terrible.
Yep, exactly. And the thing about underwriting a business loan, right, is it is very black and white. So if you don't check a box, well, that's a decline to that underwriter, and they don't know you from the business up the street from them. So to them, there is no feeling in it. There's no they're judging you based on every other applicant that they've seen that's done the same thing. It's not you, I promise. It's actually everybody else. But that's the way that it works, is they're hedging their bet. So if you don't check a box, well, to them, that's just a more of a reason for them to not give you the money, right? So
Right.
that's what we want to do. We want to make sure that when you apply, you know what you're applying for, what you can actually do with the funding, and then how you can apply that to your business to grow your business or take advantage of opportunities, because that's really what we're all here to do, right? At the end of the day, nobody gets in business to stay stagnant or fall behind, or to go out of business. No, right? The idea is you want to grow this thing and potentially sell it or pass it on to a loved one in the future. Well, we're talking about sustaining business. Then you want to make sure you're doing the right thing. So when it really comes down to it, there are things that are available to startup businesses. There are things that are available to existing businesses. They do differ a lot. So I hope that at the end of this, like I said, that you guys have a good idea of where you are today and what that snapshot could potentially look like for you, for the next few months here. Like I said, in 6 months, we'll have to do this again, though, so I can give you some new information.
Absolutely. Now I'm going to dive into the deep end because I know my listeners, they want to get all the juice
I love
without
it.
the fluff. They want all the juice. So I'm
I
gonna
love
dive in the deep end. Okay,
you
so
too.
out here in these financial business streets, they're talking about, can we get this business funding EIN only without personal guarantees? That is what's all over the YouTube and all over. EIN only business, EIN and no personal guarantee, all that stuff. Can you talk to my listeners and viewers on what is the real likelihood and chance of that happening with a younger business, or even if you've been around for a few years, what is the chance of that actually, like your chances of that really happening? Or is
So
that just something that people are just talking about?
it's a little bit of both. It's definitely a lot of fluff, a lot of headlines, a lot of clickbait, getting you to click on their video. Um,
Mhm.
but there are certain opportunities where, yes, you don't have to leverage your personal credit. But I would tell you to be careful with that because even in those scenarios, they might price you a little bit higher because you won't personally guarantee the deal. Right. So if there's a situation where, yeah, you do have an approval, but there's no personal guarantee, you might be paying a premium for that. Right. So are you comfortable to do that? Are you going to make enough margin on the deal that it doesn't matter either way and you don't want to be tied to it? Well, then that's fine. That's the path for you. But if you're somebody that, listen, it's newer business, every dollar matters, I need to save on payment or rate or whatever it really is, then you need to really understand that, hey, maybe that personal guarantee really isn't such a big deal because I would have just done this on my personal credit anyway, but I want to put it in the business's name because I want to start to develop that, right? So I would tell you that it's certainly a catch 22. The ultimate factor, and you're going to hear me say this a lot today, is it's going to come down to what you're doing with the money. And if you are somebody that you're applying the funding towards like a specific piece of equipment in your business, that may help. If you are somebody that is looking for, a piece of property for their business, that's going to be really tough these days. They do want you to personally guarantee a lot of those. If you're looking for cash in your business, I would say that's like 80-20. You're going to need one versus not. It's just right now to get cash in your business is not the easiest thing in the world. So, they are requiring a little bit more. Whereas 6 months ago that probably wasn't the case, but I would tell you right now we're kind of in the lender's world, and what I mean by that is they're approving and funding the deals that they actually want to do. It's not like where it's this super competitive environment. In fact, 6 months ago there were banks falling apart, and things were going a little crazy and a little wonky with some banks and purchasing and this and that. So now that some of that dust has settled, banks are picking and choosing the deals that they want to do. And because of that, like I was saying before, you got to really check all the boxes. And a big thing that you can do for yourself is have a resource, right? Rock Financial, we're a resource to small business owners that allow them to leverage our knowledge of the process of getting businesses funding, right? So you can work with somebody on our team to help walk you through what options might be available and what you would need to do to qualify for those options. So, whether we're talking an SBA loan where we could be talking, 6 to 9 months to get some of these deals done, or we're talking about a business line of credit that could be, in your checking account before the end of the week. Those are both products that are great, both products that a lot of businesses leverage, but they do so for very different reasons. So again, I would always point back to, what are you borrowing the money for in the first place? Don't just be one of these people that are excited by the fact that, hey, you could potentially have $70,000 or $100,000 or whatever that clickbait is, if you don't have a plan for it. Right. That's what I think, everybody's, infatuated with the free money that happened in COVID, whether you're talking about the stimulus or PPP and EIDL that went out to small business owners. That stuff is long gone. The federal government recently canceled, well, not canceled, but paused the EIDL due to an increase in fraud, right? There was a ton of fraud with PPP. Lenders are seeing that, so they're upping their fraud ticker, right? So they want to see more from a business today. So I'm not going to sit here and tell you you're going to have this crazy document intensive process. But you can best believe that you might have some back and forth in that process about, hey, maybe we do need a couple more months of bank statements to show what these payback, what the payback would look like for your, next couple of months. And what is, is there any seasonality, or, maybe they are asking for an extra tax return to show, were you profitable in the last couple of years? And if not, what did that look like? And how did you, kind of weather the COVID storm? And if you're somebody that's brand new in business, I hate to tell it to you, but it's just always tough to get money when you're first starting a business. Whether we're in a great economy or a terrible one, it's always tough. And because we're leaning more towards that not so great economy, they're taking it out on more on the startups than ever. Right now it's super duper tough for you to get access to cash as a true startup. If you're somebody that's got like 6 months in business and you're making some revenue in the business, that's when things change, right? Once you have the money to show that you can take money in your business, that's different. But if you're somebody that hasn't made any money yet, it's super difficult. One way that you can get access to capital is through equipment financing or leasing, where because you're a brand new business, they will give you money to build out the equipment within your business. So if you're a restaurant or retail shop, you're looking for, glass casing or refrigerators or, air fryers these days, all sorts of different things, right? It doesn't really matter as long as this equipment is essential to your business. I mean, we could be talking computers, we could be talking iPads. I mean, lighting, even these cool, fancy little, LEDs that
I
I
love
got.
y'all setup.
Yeah. Even the fancy LEDs that we got going on, this is all, business equipment, right? And because of that, there is a specific type of funding, equipment financing, that it's essentially an asset, right? Once you've purchased it, it's owned by the business. That equipment is an asset. And because of that, there's funding for that asset. So you can apply for that if you have, no time in business. That's going to be based more on your credit score, though, and will definitely look for that personal guarantee, especially as you're getting started. So that's kind of the wave there. The less time in business you have, the more it's going to leverage that personal credit. The more time in business, it may still leverage your personal credit, but you're just going to have more flexibility with that.
Gotcha. And one thing that you said in there about that's what I love about Rock Financial is because y'all are so good about just in my research, y'all are so good about putting the businesses with the right lenders. And instead of you going on Google and then searching business funding and getting a whole bunch of ads and God knows whatever else is going to pop up, and then you're like overwhelmed because you don't even know where to begin. Y'all are so good about really pairing the businesses with the right type of financing that they need and getting them on the right track. Like you're saying, of okay, if I know what you're trying to do with your money, I can pair you up with the right lender that can help you with your end goal. So that's what I love about you. Can you talk more about the broker side of it and what do y'all do to help get lenders where they're supposed to be versus them trying here and there and all over the place and then not getting what they're trying to accomplish?
No, I really appreciate you even pointing that out. I kind of brushed over that point there in the intro. But Rock Financial, we are a commercial financing broker. And I say that loud and proud. A lot of people will tell you, oh, we're a direct lender. We lend our own money, because that's what they think you want to hear. But what I hear in that is less options, right?
Mhm.
Because if you're somebody that is a direct lender or you lend your own capital, well, you're only going to do the deals that you really like, right? So if you know the technology space, you're only going to do deals in technology. But that doesn't mean you won't do a deal for a really great restaurant. So you're not going to turn away restaurants. Now, you could be a restaurant owner applying at the technology lender and not even know it. They don't tell you these things. Lenders don't tell you. They want to collect the data. They want to know who's out there, who's borrowing the money, right? They tell everybody they do everything and they have the best products. So that's why I love being a broker in this industry is we're not tied to any one product or service. We're not tied to any one lender's requirements. No, we stick and move. We're like a good boxer, like Floyd Mayweather, or we're definitely in there bobbing and weaving because that's what it becomes. When we apply for somebody on their behalf, typically we're going to like 3 to 5 different lenders within our waterfall, but that fit the particular bucket for what that business is looking for and what they might actually qualify for. Now, we may get 2, 3, 4, 5 approvals, right? But that doesn't mean that all the approvals are the same, right? Some may have a longer term, some may have a cheaper rate, some may have more money, right? So what we then do is we then share the information back with the lenders and we say, hey, your competitor just approved this with a longer term. Your competitor just approved this with a cheaper rate. Do you want to compete? And how does that work? And then what ends up actually happening with our technology, because we're super duper invested in technology, is we actually blend that offer together. And if you're a business owner or somebody who works with business owners, you get access directly to a calculator that blends all of those offers for you. So you literally just get a calculator where you go in and you say, hey, I'm going to basically play with all of the terms, all of the rates, and get a real feel for what are the different options for my business and what does that look like? What would my payment be like? And what would this whole thing kind of shape out as? And then if it works for you, you literally just click accept offer, and it will tell you, hey, these are the next steps to get you actually funded. So depending on what offer you've accepted, it will then spit back to you, hey, this is the information we need to get this loan closed for you. So it really is a system that takes the technology piece but also the people piece and kind of blends them together so that, yeah, we're going to use technology to keep this thing moving super quickly and efficiently, but ultimately what's going to get you to that point is having multiple points of contact where you've had the chance to tell your story and go through exactly what you need. So this way, when you are presented with options, it's going to fulfill that need. So yeah, I love being a broker. I think it's the best seat to have, especially right now, because like I said, lenders do have the ball in their court, so they're really picky and choosy on what deals they're doing, and that works for them, right? Like they're allowed to do whatever they need. We have seen some things opening up, so don't go, it's not too crazy out there, I can tell you that much. They're still lending a lot of money, that's for sure. But they're just seeing a lot of applicants, right? I can tell you we're seeing a lot of applicants. That means people are applying for money more than they were. I saw a statistic a couple weeks ago, and you might even know more about this than I do because it's on the personal credit side. But I forget exactly where I saw it, but it basically was saying that last year, right around this time, the average credit utilization was 63%.
Yeah, I saw that.
Right now, the
Like at 90 something,
is
isn't it?
over 92%. Yeah,
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 I
yeah.
saw that. I saw
So
that. It's
because of
crazy.
that, right? Like that right there is going to change everything when it comes to business funding. And you may be
Right.
saying to me, like, what are you talking about? Well, everybody's credit score is affected by that. All of those borrowers that were 710, 720, 750 are now 610, 620,
Right.
590 because they
Mhm.
have this crazy utilization. And that's
Mhm.
not necessarily the worst thing in the world if it's on the business side, but it is if it's on the personal side. And
Yes.
because of that, and because of lenders doing all this due diligence, and like I said, them looking for, kind of prime borrowers, it can hurt you. So again, it really comes down to knowing your business, what you're looking for, and then hopefully having some really great resources. And hopefully that resource is Rock Financial, to get
Absolutely.
to get you some information behind this stuff, because it can be a lot, right? There's thousands of lenders, like you mentioned. If you go on one of these platforms, businessloans.com or Lending Tree or whatever it is, like you're gonna literally, and I've done this in the past, so I know, you will get it the second you click submit. Within 5 minutes, you'll have over 100 text messages, over a
Yeah.
hundred text messages, because they just fire them at you because they just want you to click one. That's all it takes. All it takes is for you to click one for them. So, like for us, it's completely different. We only get our business through people who refer businesses to us, right? Through people like you who give us a platform where we can go and talk about what we know and the process that we've built. So just flipping the script like that alone teaches you that we're totally different than the rest of the competition, right? The only people who send us business are bankers, attorneys, CPAs, people with a following like you. Like, let's face it, you wouldn't just have anybody on this platform. You wouldn't just have anybody doing this. But if you go online and you search Rock Financial, you'll see it's real business owners, it's real people who work with businesses who refer us clients and have nothing but great things to say. And the reason is because whether we fund their business or not, it's easy to work with us. We keep it super duper informational and we're about the business. So when you're somebody who does apply with us, it's going to feel very seamless. It's going to feel like, you know, we know what we're doing. And that's because we do. We're going to ask, and you'll hear this. If you do apply with us, like you'll get on the phone and it'll sound like something like this. Well, hey, I'm probably going to ask a lot of questions because I want to get to know you and your business. And that will allow me to do my job and get you the funding that you're looking for. And you should hear something like that from 99.9% of the conversations you're going to have, because that's exactly what it is. If you give us the right information, we can go out and be dangerous for you. And as a broker, that's where we want to be. We want to be able to stick and move, like I was saying before, and go out and blend an offer that nobody else is even thinking of. Right? By understanding what your business needs, we can help structure the deal. Right? And I can't tell you how many times we've done that. Like where somebody will come in they'll say, I want nothing but a line of credit, nothing but a line of credit, nothing but a line of credit. And we'll get them 3 other products and none of them were a line of credit. And they're like, wait, that worked out better. And we're like, yeah, no, we know. But everybody has this idea of what they actually want, but what they need could be different. So the savvy business owner comes in, they have that conversation, they get us the information that we're looking for. We give them our initial feedback with approvals and go through all the different nuances of what those look like. And, a lot of lenders have different fees and structures. And so we go through all of that stuff and then we decide what's best for you and your business and you make that decision. So it really is a process where you can stay focused on your business and allow us to help with the funding.
Sounds good. It really, and I love that you are very thorough with your answers. So that way, nope, if they look at this video all the way to the end, which I know you guys are gonna look at this video all the way to the end, you are answering all the questions that I'll probably be getting emailed about.
Well, listen, we know 1 or 2 of them aren't going to watch the whole video, so we'll answer the questions anyway. But no,
Exactly.
what's great about some of this stuff is it is going to change. Like I said, we could hang this thing up honestly, and I might have to call you in a week and be like, what I said is actually different now. Like we work with over 75 different banks and lenders. We offer all of their products and services as an extension of our own, right? So when they're changing one little outline for one industry or one credit profile, or they don't tell you this, they don't give you this information. We only see it in the numbers. Because we do a good amount of volume, and based on the applications we receive, we get a lot of information that we get from, approvals and declines. So we know who's doing what. Not to mention, like I said, lenders and banks, they'll lie to you. They'll tell you they'll do deals to $5 million or $10 million. And our numbers will say they haven't approved a deal over 250 in the last 6 months, so there's a lot that goes into this stuff. And listen, can you go out and get funding yourself and really leverage it and get the best product for yourself? Absolutely. Absolutely. There's no reason to hold you back. It's 2023. You can do whatever you want. Like, I'm just going to leave it at that. You can do whatever you want. But what I would say is that it comes at a cost, right? And this is always a unique part of a conversation is, what is cost really? Is cost really the cents on the dollar that I'm going to pay for this money? Or is cost actually not getting the money, right? If you could use $50,000 in your business and that $50,000 is going to cost you $75,000, by the way, that's 50% in case you were wondering, right? But that's over 12 months, right? And now in your business, you flip your product every, let's say, 8 weeks or 2 months. So now over the next 12 months, you'll flip your product 6 times before you pay back that full 75,000, right? And this is super duper aggressive. I'm just letting you know. Yeah. But because we work in business, that 50,000 as a business owner, you flip that in inventory, we could be talking about you making 85, 90, $100,000 on the first flip. So if you made $100,000 on the first flip, and then you did that 5 more times throughout the year, you've now made well over $500,000 on the $25,000 of cost of capital. That sounds super aggressive and a 50% interest rate. And I'm not saying that that's what you're going to end up with. I'm just giving you that aggressive example so that you understand that you can apply even an aggressive example to your business and go, oh, wait, that the dollars actually make sense, right? And that's what it has to come down to. We always say, don't be penny smart and pound foolish, right? If you're somebody who, you want to save a point or two on the rate, but that's going to cost you more in the long run, well, that's the biggest hurdle for yourself. My mom was she's the best, don't get me wrong, but she raised me to be a bargain shopper, right? So I'm in Walmart looking for the rolling back prices, and all of a sudden I didn't realize that it's actually marked up from 2 weeks ago. They just rolled the price back after the last week. You know what I mean? So like we try to avoid that in the funding world where, yes, that rate might have come down 2 points, but it was still 10 points higher than what you should have paid anyway, right? Or, hey, maybe it is 2 points higher than it is, but by you waiting 6 more months to get the money, you're going to lose a sick opportunity in your business to make a lot of money. So we really try to make sure that when a business owner does apply for funding, they fully understand what it means when we talk about cost, because cost is not just the cost of capital. We're talking about the cost of the time that you're going to put into this thing. We're talking about the cost of you potentially not getting the funding. So there really is a big conversation that has to be had where, listen, when you're thinking about getting an extra 50 or 100 grand in your business, you might not be thinking about those parts of the cost right away, right? So that's why I said you'll hear a lot of the conversation start with something like, hey, I'm going to ask you a lot of questions, so this way we can stay on the same page. But that's just one of the benefits of working with somebody like us. I mean, and just to, I know I'm rambling here, but just to give you one more quick example about how little this information matters, but how much it matters. I heard one of our business advisors on the phone last week, and he's going through an application with a borrower. And I literally hear him. He's, right on the other side of the office, and I hear him going line by line, talking about their EIN and, the this date and, this piece of information and mailing address and business address, personal information, right? And they get to the field for industry, and I promise you, like our application is super easy. Like we're not trying to trick you. It's all straightforward information. But they get to industry, and he goes, no, I don't want you to put that. And so now I listen in. I'm like, wait, what? So he's like, listen, and I'm going to give you a quick analogy, right? If I ask you to picture a doctor, right? I'm sure you have this picture in your head, right? And I tell you to picture a tow truck driver, you probably don't picture the same person, right? But what if I told you there was a medical transportation company? What would you then classify that as, right? And how does that work, right? And how does an underwriter look at it when that transportation company puts themselves as transportation versus medical? Because I can tell you that underwriter is going to view them completely differently. You have completely different options available. So there's totally little things. There could be major things throughout the process that we can help with, but I promise you, every one of those little things adds up into a lot of time saved. And let's face it could be a lot of frustration. You could have ended up with 5 or 6 declines. They ended up funding for a lot of money. I can assure you that they took like $350,000. But the idea is that, hey, you want your best foot forward the first time. You don't want this to be a learning experience. I promise. What you want is, even if you had to take half as much money as you thought you needed at first, what you want is you want to start that relationship with the lender so that they learn that, regardless of all the industry and nonsense that goes on around things, if they have a payment history with you, you got a good shot of getting money from them in the future. Right. And it's not always about right now, right? Like a lot of times it is about the future. So if you can take advantage of a little bit of funding right now, develop that relationship. We have people that we see all the time that, they'll come in and apply for 250,000 and might take 25 or 30,000 to get started. And you might say, well, why? Well, number one, it could be more expensive, right? Rates are up right now, so they don't take as, more than they need. But number two is if they can get access to funding more frequently, well, now they can use the smaller amount and pay smaller payments rather than having this gigantic amount of money out where they'll have more money, to make in payments. So, we'll see people take money more frequently, right? Maybe they'll take, a loan every 3 to 6 months, right? And we'll structure it on super short terms so that they have the advantage of doing so. We'll see people that will, again, it really comes down to what they're using the money for, but you can't take advantage of the capital unless you really understand wholly how you're going to apply it. So that's what we try to do. We just try to make sure we're thorough. We have these questions that we are going to get answered so that you have the best shot at getting funding.
That sounds good. I'm telling you, I'm loving it so far. I really am. And I know my viewers are going to get a lot of pointers from you today, Tony, and I sure appreciate your time. So
Absolutely.
let me ask you this real quick, because this is one of the burning questions that I always get. What is, and I want to say like the average, I just say, what is the average credit score that some of the lenders that you all use over at Rock Financial are looking for?
See, that's a great question. And again, this one's kind of like a moving target as well. One of those things that matters right now, but might not matter so much in 6 months. The one thing I will say about our lenders and their requirement of credit is 99% of the lenders that we work with are not going to approve or decline you based on your credit. What that will affect will be your rate and your term. Right? They may shorten your term or they may make your rate more expensive because you don't have as great of credit, right? But they're not going to not give you capital for your business. And what I mean by that is if you are applying for funding for a business that you already own, That's what they're going to look at, is how much money can this business, based on its recent performance and based on its recent cash flow, how much money can they afford in order to afford payments on that money, right? So that's really what they look at. So it's not so credit driven, especially with us. Now they are going to look at your credit, and you may be saying, for what? Well, number one is major blemishes, right? Do you have any liens? Do you have any major chargebacks, or any closed accounts, right? If you got mortgage fraud, it's going to be tough. you
What
know
about bankruptcy?
oh, see, so bankruptcy is another unique one, right? If you are one day out of a closed bankruptcy, we can help. If you are in an open bankruptcy, can't help. But if you are in a closed bankruptcy, I'm talking about you closed it yesterday, apply. No, I'm just kidding. No, I'm serious though. Like, we can help the day after you get out of bankruptcy, because that's, I don't want to say that's where we do a lot of our business, but we do help those that banks won't. Right. So things like credit, or bankruptcy, or even tax liens, right? You may think like, oh, nobody lends to anybody with tax liens. Well, we have a lot of lenders that will lend to you if you have a tax lien. It depends on who it's with, whether it's state or federal, and what the nature of it is, and whether you've made any payments towards it, or you in a payment plan. There's a lot that goes into it. But I can
Right.
assure you that sometimes what they'll do is they'll take the capital and they'll just pay them off for you. Right now, you never have to worry about that again. So you could have a totally bankable business, right? Somebody that's been in business for a bunch of years. They're, in a great industry, in a great location. They, make a ton of money, but they can't go to the bank and they have great credit, but they can't go to the bank because they have a tax lien. Right. So now the bank won't lend them money. Well, we'll come in and pay off that tax lien. And then in 6 months, they're paying us off with money that they got from the bank. Right. So that's a real way to kind of leverage what is out there, and the differences between traditional and alternative funding, is, hey, there are a lot of options outside of the bank, and how you leverage those is going to dictate how much money you really get access to and what it looks like. There's certain lenders that have no palette for risk for some of this stuff. And what I mean by that is, there's some lenders that we work with that are just like the bank. In fact, they're usually selling bank money. It's on a line of credit that they got from a large bank, right? But then there's other lenders that have a much larger risk appetite, and these are things that add into risk, right? When we talk about risk in a small business, there's a lot that goes into it. Your business's industry, your location, how long you've been in business, how many owners there are, what's the structure of the ownership, do you own any assets, what assets do you own, what liens are on those assets. All of this stuff matters. Who How you paint that picture for an underwriter is going to determine what you'll get access to. What we help with is that painting. We then go out and, I don't want to say sell the painting for you, but that's what we do. We go and we take your painting to market, right? And you give us all the details, and we're going to share those the same way that the lenders like to see it. Right. Because sometimes it could be as simple as that. You send them a PDF, they needed it in a different document, you were declined. Like,
Yeah.
it's very finicky. You never really know. They don't really give you information. Sometimes you'll get a decline reason. It'll say like, oh, doesn't meet risk score, or doesn't meet minimum criteria. Like, that's very vague. You get nothing out of that. You can't grow from that. So what we do is, we have points of contact at these lenders. We'll call them up and say, hey, why did you actually decline this deal? And now you know what you can work on. There's plenty of people that apply with us today that won't take money for 6 months, 3 months, 12 months. They'll come back in this time, because it's just not, timing isn't right now. And that's fine too. It doesn't really matter to us. What we want to do is make sure whatever decision you make is well informed. And that's really what it comes down to, is giving you the platform to make the right decision.
And that was one thing I was gonna ask you about. Because sometimes, say if you want to start a business, but you are still trying to get all the working parts, you're doing your business plan, you're just trying to get everything together. You might be doing your market research right now, and say you're really not trying to start your business until 2024 or later in 2024. Is that something that Rock Financial can like help you with those steps to get you to that goal of, hey, I'm not looking for it right now, like today I'm not needing funding, but I know I'm going to need funding in the future?
So, can we help? And what we, excuse me. Yes, of course we can help. And will we help? Absolutely. But we're probably not the best resource. And what
Okay.
I mean by that is our focus is where businesses can actually get funding. And that's
Mhm.
where we're best. And what I mean by that is like if you're not eligible or aren't taking funding today, I probably have some obsolete information for you. And I'm probably am not the best person for you. What I would say though, and I hope everybody writes this one down, there is a free resource provided by the government. It's called the SBDC. I don't know if you've ever talked about the SBDC on your channel before, but the Small Business Development Center. They're located at a lot of major colleges. They're pretty much in the backyard of everybody. I went to school in New Jersey. I didn't even know that we had one at my college. Like, so if you didn't know that this existed, believe me, I went to school for business, was at the business school where this thing was, and I had no idea that it existed. So trust me,
Wow.
it's certainly under explained. But what's great about it is it's funded by the SBA. So they teach you how to take advantage of funding more specifically through the SBA, yes, but they teach you how to set your business up so that you are fundable, right?
Yes, that's
And
what I was talking about.
and yes, they'll walk you through what your business plan needs to look like, what the different pieces of information are, what market research you should be looking at. And what's cool about it is because they're in your backyard, they're going to have all of the demographics for your exact region and for what you're looking to do. Now, if you want to go national, they'll get you national information too. It doesn't matter. But if you are somebody that, you have a specific footprint in your local area, maybe you're an auto repair shop or a pizza place, right? Like you're not gonna have this national footprint. I get that, right? Well, you can get all this information from the SBDC. They give out free business consultants. It's free. It's free.
Yeah.
Like I promise it's free. I wouldn't tell you anything unless it was free 99. That one is free. That's free unpaid consulting. You don't have to pay for it. Well, you do, but it's in your taxes and you didn't even know about
Right.
it. But no,
Now,
I would just
always
say
give
that
people.
there's
I'm
always
sorry. Go ahead.
I was just gonna say there's always resources out there. That's one that I know of that like I constantly point people to. I constantly am getting those people then referred back to me. Like, hey, it worked. I'm back. I need that money we were talking about. So like
Yeah.
that's why I always point that one out is because I know it works, right? Like, at the end of the day, that's what we're all here for is to try to
Right.
figure this thing out. And like I said earlier, businesses are about the resources they have access to. That's a great one to keep in your utility belt because you know entrepreneurs, they're unique people, right? Like it's probably not the last business that they'll start, right? Like they probably have three other ideas of things they want to do already.
Right.
I'm like that. I'm like that. I have my own conversations with the SBDC people. Like, hey, is this just an idea or do I got something here? You
Right.
know,
Exactly. Exactly.
so it's definitely one of those things for sure.
So I got one more question for you. I don't want to keep you too long. I know you're a busy man. You got to get funding to all these businesses. But I want to ask you, okay, we talked about the credit score and I talked to you about with Rock Financial, getting the businesses to the right lenders for what they're trying to accomplish. So what is it if I'm there, I'm ready to get funding? What paperwork are you guys going to be looking for to make sure that they have that I would have if I'm talking to one of the advisors and making sure that I am on the right track. So could you kind of explain what that paperwork may look like for my viewers?
Yep. So I'm going to give it to you very, very plain and simple here. We keep the application process super duper easy. For us, it's going to be the last 6 months of your bank statements and a signed rock application. If you do that, typically within 12 to 24 hours, we can get you an initial approval. And then based on that initial approval, you may have to provide additional documents. And when you do apply with us, and even before application, but if you click a link and you click the link from this video and you go on and fill out the form, you'll have a chance to speak with somebody who they might request a little bit more documents than what I just mentioned, but that's because they're speaking to your specific use case, right? Like that's kind of like the minimum. right?
Mhm.
And let me just take 2 seconds here, and I promise I'll keep this one short and sweet. But
Okay.
just to give you a real quick snapshot, we help business owners get access to anywhere between $5,000 and $5 million. We do that across a ton of different products. On the commercial side, we do commercial real estate, we do equipment financing, factoring and accounts receivable financing, PO financing. That's all asset based or tied to a piece of commercial asset. Then on the unsecured side, or where it's not tied to any assets, we offer working capital loans, term loans, lines of credit, cash advances, a lot of different products. And what I can tell you about all of those products is each of them are a little different. If we're talking about an equipment finance product where you're looking to purchase a piece of equipment, I may ask you for a quote for that piece of equipment, right? If we're talking about accounts receivable, I'll need to see an accounts receivable report, right? Like, so there are some things that may be required depending on the different products that you might be looking at. Or once you start to go down the rabbit hole of, hey, this is actually more what I'm looking for, we might need something that shows that. But outside of that, it's going to be a very basic conversation around, hey, this is what I'm looking for, you as the business owner. And then from us, it's going to be around, hey, this is what we would need to make that happen. Right. And then what starts to happen, right, just so everybody's aware, is, hey, you might not have all this documentation, right? If we're talking about the SBA, they want every piece of information you could ever look for. You got banks
Right.
and you got the government. They're looking for all of the information. So if that's the case, right, and you can't get some of this information, well, then maybe the SBA just isn't the best product for you. We're not going to try to stick a square peg into a round hole and tell you, no, 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 we need this, we need this, we need this. And then you're just telling us, oh, I'm working on it, I'm working on it. It's not there. We get that, right? Like, if it's okay if maybe you haven't had a profit and loss for the last 3 to 5 years, like, that's okay. It's all right. Just tell us what it is so that we can then go get you the right product, right? Because even if it is where we have to go with the lowest document requirement out, well, that's fine. There's products out there that with just 6 months of bank statements and application and you electronically, checking out, you're in and out. It's pretty simple. So, it's super duper easy to get funding. But more importantly, it's about the information you give us so that when we come back to you, we're giving you the information that you're looking for.
That's awesome. That's awesome. I think I'm looking at my notes. I told you I got my questions here, guys. I'll make sure that I'm very thorough because I don't know when I'm gonna get Tony back. So that's why I'm trying to make sure I got all my I's and cross all my T's where I got it. So okay, and you touched on alternative funding sources because I looked at one of y'all's old webinars that you did. Well, it's not that old. Y'all did it back this summer, back in July. And I was looking at that about the alternative funding sources for small businesses. Can you kind of touch on that just a little bit? And then I'm gonna let you go on and do
No,
your
no,
bit.
no, you're good. I listen, like I said earlier, I'll do this all day. But no, the biggest difference between alternative and traditional funding is, when I say alternative, I'm talking outside of the bank, right?
Mhm.
So outside of your local credit union or Chase or Wells Fargo, Bank of America, big bank type of bank. That's what I'm talking about. I'm talking about outside of the bank. There are countless options here. Now, I don't want to confuse you guys with kind of the Shark Tank world, right? I'm not talking about equity. We're not going to take part of your business. That's not what we do. What we do is debt. So we're going to give you money and then you owe money based on the money that we give you. That's the way that it works. So we specifically work in the alternative debt financing side of things. So we specifically work with businesses. We don't work with any personal loans or personal lines or anything like that. So if you do work with us, you can rest assured it's going to be tied to your business. You might have to personally guarantee it. We had that earlier in the conversation. Rewind a
Yeah.
little bit, you'll see that part. But no, the funniest thing that usually comes from this type of question is, why don't more people know about alternative finance? And
Right.
I promise you do. It's just so close under your nose, you don't even know it's there, right? For example, some of the biggest companies in the world offer alternative financing. If you have a Shopify account and you're selling online using Shopify, based on how much money you process through Shopify, you can go out and get money through Shopify. They're one of the biggest lenders in our industry. Same thing on Amazon. If you sell on Amazon, they will issue you an Amazon line based on how much money you sell on Amazon. Same thing with Square. If you use Square as a payment processor, these are some of the biggest corporations in the world. Amazon's Jeff Bezos is one of the richest people in the world. Elon Musk invented PayPal. PayPal is one of the biggest lenders in our industry. So the richest people in the world and the biggest companies in the world are in alternative finance. I mean, the biggest investment bank in the world is Goldman Sachs. They back a bunch of the products in this industry. So I promise you, alternative may sound like this word that's like out there and foreign. No, it is right under your nose. And the only difference is you're not getting it from a name brand bank. That's the only difference.
Tell the truth. I can attest to that because I use PayPal for my POS system in my store. And I've been using them now since I started my business in 2020. So all my money runs through there some way, shape, or form. So they know how much money that my business generates. So they're always sending me emails about some type of loan or
From
whatever
Loan
that from PayPal.
Yep, it's called Loan Builder. That's their
Yeah.
platform. If you go look up Loan Builder in your email, you'll see it. I promise.
Yeah, and they always sending me. I don't need it. I don't need. But they always sending me something like that, and that's how I know what you're talking about is true because I get it all the time. I've gotten several emails about that they've sent me, and it's probably because they see how much money I'm bringing in because I use them.
Yeah, absolutely. I mean, even Chase, Chase, JP Morgan Chase was recently partnered with a publicly traded lender in our industry to send them their declines because they knew that this was a product that is out there. They're now designing their own alternative lending product that they're going to sell. So like every bank is involved in it. Anybody with money is trying to get involved with this, to be honest. But what's unique about it is how much they're saying it's going to grow over the next few years. Like, I don't know if it's just that banks will continue to not service the small business market, but there's such a large need and that need is being filled. Like there's a lot of people that are jumping in. I mean, you mentioned it through PayPal, but I got a buddy who's my chiropractor and we're literally just lifelong friends. We went to high school together. And we constantly are talking business and I'm constantly asking him what marketing campaigns are you running? What are you doing? Right. Like trying to help him out. And we had a conversation and I'm like, let me help you build a campaign. Show me your, where do you keep all your customers? He's got them right in Square where all of their, all their charges are in there and he can go in and see how many times they've booked. And, it's a really great platform. And all of a sudden I see the button that says get funding. So my nosy self, I click the button. I want to know what's up. And instantly they were going to give him almost $40,000 instantly.
Wow.
Instantly. It was based on what he had processed directly through them the most recent months. It was like, hey, you're already approved. We don't need anything except for you to just acknowledge that we're going to continue to pull this back through your processing. Right. So there's this huge influx of technology over the last 15 20 years, right? Like the iPhone is the one that I always point to, right? Like the iPhone didn't exist 20 years ago and look at what it's done to the world since then, right? But it's that piece of technology and not just that piece, but it's technology in itself that has compounded over the last 15 to 20 years and really driven more business into funding, and that is a good thing. You get a lot more competition, which breeds for a lot better products for business owners. I mean, shoot, I've been in this industry since 2016, and even since then I've seen the evolution change so much, like so much. It's crazy. So I think that even in the next 3 to 5 years you're going to see even more growth. You're going to see even more large corporations coming into this industry. And what does that mean? Well, that means that they're just going to try to hit you with every clickbait and every line that they can to try to get you to take it from them. The savvy business owner, the best thing they can do is understand that it's all marketing, and they got to understand do the dollars make sense. And if you put pen to pad and it doesn't, good, don't take the capital. I'll be the first person to tell you. because this money can be expensive. We're talking about, expensive time and expensive money. So, you want to make sure if you are pulling the trigger, it's because it makes sense.
That's right. That's right. Thank you so much. And I think I covered everything. I'm glancing back just to make sure. I think I covered everything, and I know for sure, guys, if y'all have any questions, you can email me, but definitely click my link that's in the description box to get connected to Rock Financial. Okay, click the link, and they will go through everything that you need to go through to get the funding that you need for your business. If there's a question that you want to just ask me, and I talked to Tony, I talked to Ryan, I can get you some answers. If you don't want to go through that, we can get you the answers. But either way, click the link in my description, and that way they can get you the funding that you need for your business, especially if you like Tony's nice smile.
No, thank you so much for having me on. And like Starr mentioned, make sure you click that link because that's going to get you paired up with somebody right away to reach out to you. We'll be reaching out knowing that you came through and watched this video, and hopefully you got a lot of questions for us because, like I mentioned, we're going to have some for you, and hopefully we can get you guys some funding. That's the idea here is being able to leverage us as a resource. So I appreciate you, Starr, for having me on, and appreciate anybody that listens to this thing and stuck it out with us through the whole recording. So definitely.
Absolutely. And if y'all want any more education, y'all can go on the Rock Financial YouTube channel. I'm also put a link to their channel in the description as well as the webinar that I had watched back in July for the alternate funding. If you even want any more questions or want any more information, he did a wonderful webinar about that y'all can also use. He got a lot of educational videos over there on their YouTube channel. So please check that out as well.
Appreciate that. That's a best kept secret in alternative finance right there is that YouTube channel. You can find all the information you need. If somebody ever asks us, and I promise this is the last thing, but if somebody ever asks us like, oh, what can I do to keep up to date? I always say get on our social media because that's where we share the most information. It's where we push the most content. Like you'll always know what's hot and what's not based on what's going on there.
Absolutely, absolutely. So go on their YouTube channel, their IG, y'all on Facebook as well.
Facebook, Instagram, LinkedIn, Twitter, YouTube. I'm on all of them. We're on all of them. You can find us.
Good.
You can
Y'all
certainly
can
find
find Rock Financial on all of them. So make sure y'all checking out and check out the link in the description to get hooked up with somebody that can help you with the business funding. If that's it, I sure do appreciate you spending some time with me today, Tony. Thank you so much. You're a wealth of information, and I really do appreciate it.
Thank you, Starr. I appreciate the conversation.
All right. We'll see you next time, brother.
Absolutely.